Welcome to the Real Estate Way to Wealth and Freedom podcast with Jacob Ayers, providing actionable content to help you along your journey to financial freedom through real estate investing. As the premier asset class, real estate has helped ordinary people just like you amass fortunes. The benefits of passive income from real estate investing will allow you to live a life you want. And now your host, entrepreneur, real estate investor, and apartment deal syndicator, Jacob Ayers.
Hi, and welcome to the Real Estate Way to Wealth and Freedom podcast, episode 75. I'm your host, Jacob Ayers. Thanks so much for tuning in to yet another episode. Today we're going to be discussing building a truly passive income stream with our guest, Marco Santarelli. Now, as many of you realize, real estate investing is not quite always as passive as we like to make it sound. There are a lot of things involved, from managing the property or managing your property manager to finding tenants, maintenance, repairs, all of those things. Our guest, Marco Santarelli, has built a business around providing truly passive real estate investments. Marco is an investor, author, and founder of Norada Real Estate Investments, a national real estate investment firm offering turnkey investment property in growth markets nationwide. Marco is the host of the Passive Real Estate Investing podcast and is also the creator of DealGrader, which is a scoring system that measures the investment quality of a real estate investment, giving you an overall snapshot of its profitability and investment risk. Marco purchased his first real estate investment at the age of 18. He successfully handled the entire rehab and property management of that first property without ever taking a course or reading a book on the subject. Marco went on to get his real estate license and sell residential real estate for 3 years before leaving real estate sales to pursue other business ventures. Because of his love and passion for real estate and desire to help others succeed in building their wealth through real estate investing, he eventually returned to real estate investing and founded Norada Real Estate Investments in 2003. Today, Marco is a licensed California real estate broker and runs a successful real estate investment firm focused on helping other investors build wealth through the power of real estate. Without further ado, let's jump into the episode. All right, today I welcome on the show Marco Santarelli. Marco, thanks so much for joining us.
Thank you, Jacob. Great to be here.
Yeah, absolutely. Thank you. Well, Marco, can you tell the audience a little bit more about yourself and how you got started investing in real estate?
Well, I refer to myself as a perpetual real estate investor. I've always had kind of an entrepreneurial hat on, so I like to think of myself as an investor first, an author, an entrepreneur second. And of course, I've got a beautiful daughter and, I consider myself a father and a husband. So you're asking me how I got started in real estate. And for me, I got the bug early on. I actually bought my first property when I was 18 years old. And, you told me that your audience here is made up mostly of millennials, but you got a younger demographic. And I think that's wonderful because I would really like to inspire and encourage your audience to get started as soon as they can. For me, it was 18. I found a townhome. I purchased it because I could qualify for financing at the time. So I had enough for a down payment. And with that particular property, it needed work. So I did end up doing renovation work. I gutted some of it, but ultimately I put a sign in the yard, took applications. Back then there was no internet. So it was the longhand way. It was done by sign and newspaper, and you had people fill out a paper application and, you review them and meet with them and then ultimately lease it out. And that's exactly what I did. And so the whole process was a little lengthy, but it was pretty much textbook. So I didn't take any courses. I just happened to jump in and do it. And it turned out that it worked out well and to my favor, because years later, regretfully, I sold the property. And what I ended up walking away with was a nice chunk of cash. And that felt great. It was almost like a long-term flip, if you will. But my biggest regret doing that is, and what I recommend people don't do, is sell your real estate. You should never sell your real estate. You can exchange it tax-free. You can build up and expand your portfolio. But unless you're in an emergency and you need the cash, you really shouldn't be selling your property. So that's how I got started. I'm not sure if I'm answering your question, but that's really where I got my start.
Yeah, awesome. Well, Marco, where are you operating in today's environment in terms of real estate? What kind of real estate do you have in your portfolio, that is?
Well, I think you're asking me two different questions. Where I live and where I invest are two completely different things. And I think it's important for your audience to understand that. I have a trademark saying, which is on the top of every page of my website, and it's live where you want, invest where it makes sense. So for me, my personal residence is in Southern California, right by the coast. I live in white collar suburbia. I live in a bubble inside a bubble. And so it's an interesting place to live and a very expensive place to live. But because of that, it's a really hard, if not impossible place to invest if you want to be a buy and hold investor and have long-term portfolio that generates cash flow. If you can generate cash flow here, your rate of returns are very, very low. So there's probably many people that listen to your podcast that are in a similar situation where they live in the coastal markets of the United States, up and down the West and East Coast, where it's very, very expensive. And that doesn't make sense. So what's a person to do? Well, you need to start looking further and further and further away from where you live. And as it turns out, for me, where I focus personally and with our business to help investors and clients build their portfolios is in states where the numbers actually make sense from a financial perspective. And that's typically the Midwest all the way down through Texas and on over through the Southeast as far as Jacksonville, Florida. So it forms basically an L shape in the center of the country. So me personally, I'm investing in markets like Kansas City, Missouri. I'm looking at Birmingham, Alabama, Northwest Arkansas, Jacksonville, Florida. Those are 4 of the 15 or 16 markets that my company need to look for the markets that make the most sense from an investment perspective. And to take that just a little step further, it's not just the property, because I can show you a property that has attractive numbers and maybe is in good condition in virtually any single market in the United States. But the problem with that is there are many markets that don't make sense because of the fundamentals of that market or the economics. Maybe there's declining population. Maybe there is a lack of jobs or negative job growth. Those are not necessarily the markets you want to be in. So you want to choose your markets accordingly at a macro level and then focus on the best neighborhoods that will give you the right price and rent ratio. And usually for us, that's about 1%. 1% of the gross, 1% of the purchase price should be your gross rent. So that's what I focus on personally, and that's what we also focus on with our company. So essentially, we practice what we preach.
Yeah, definitely, Marco. And it's a very common phrase and a good one at that, to live where you want to live and invest where the numbers make sense. So like you say, sometimes you have to invest outside of your market in some of those more cash flow positive markets like, the Midwest, Texas, and even Southeast US. So Marco, what are some things you look for in a market and a neighborhood when you're looking at some of these new places to invest in?
Yeah. So Jacob, at the heart of it, really, it's jobs and job growth. And ideally, if you have it, population growth, because ultimately job growth will lead to population growth. So that's the first thing I look at is I look for a market that has a healthy economy, a diverse economy. You don't want to be all oil and gas, for example, as we were talking about offline here, although that's not necessarily a bad thing if you have a diverse economy, but you don't want to be a one-trick pony market like Northwest Dakota was when oil prices were high and you had a hot market. And then, the oil prices came crashing down to below $50 a barrel. And guess what? Now you have a ghost town.
Yeah,
so,
right.
Yeah. And so you want that diversity. At a high level, you want job growth, population growth. You want a diverse economy broken up into multiple sectors, be it professional, healthcare, finance, whatever. And then what you want to look at are the price to rent ratios. You want to start looking at the market as a whole, but be more specific in terms of location, because every market has submarkets and suburbs. So you want to start breaking it down. If you can find good neighborhoods, and for me, I'm going to define that as anything that's a B or above, a B, B plus, A minus. If you can find that type of neighborhood on a scale of A through D, what you want to do is find properties that are in good condition, either new or like new, and you want to ideally, not necessarily, have a 1% rent to value ratio, which means if you have a $100,000 property, which is not uncommon in many places throughout the Midwest and the Southeast, you want to be able to rent that thing for $100,000. If it's a $150,000 home, that might be a little more difficult to do. It might be a $1,300, $1,400 per month rental, but that's okay because you're still going to get favorable numbers, good cash flow. It'll be in a good neighborhood, so you'll have long-term stability. You'll have appreciation potential. That's what we look for. Where we kind of draw the line, and unfortunately, there are some companies out there that are marketing, selling, and promoting what I refer to as very concerning properties. And that's typically properties in the $40,000, $50,000, maybe $60,000 price range. Our company has kind of drawn a line in the sand at about $75,000. So if it's below that, we probably don't have it and we probably won't carry it or sell it. 75 to 80,000 is about the break point. Again, what I'm telling you is market specific, because
Sure.
if you take the same neighborhood and the same property in a market like Birmingham, it's going to be a different price if you drop that same property in the same neighborhood in, let's say, Kansas City, Missouri, or Jacksonville, Florida. So the exact same product could be anywhere from 80 to 120,000 from market to market to market. But ultimately, we want, that 1% price to rent ratio if you can get it. And then last but not least, you want strong property management. I mean, that's a key thing for us, is a strong property management team, because I jokingly say you live and die by your property manager. So the long answer to your short question is start with the market, not with the property. And it's a top-down approach. It's actually my 6th rule of my 10 rules of successful real estate investing, which is posted prominently at the top of our blog. And at the end of the day, find the right market, work in the right neighborhoods, have the right team, and then shortlist the properties you want to buy. And if you do that and you let the numbers help you make those decisions, you'll be very, very successful.
Yeah, awesome, Marco. And now what about types of asset classes in these markets? Are you targeting all single-family homes, any small multifamilies? What does that look like for you?
So as far as what we offer investors, it's mostly what I buy anyway. Single family homes is probably 90% of what we offer, just because it's very, very plentiful. It's the most liquid form of real estate, and the numbers work very well, and you find great tenants who want privacy that you get with single family homes. Duplexes and fourplexes we carry as well, but they're much, much harder to find. When we have them, they sell very quickly. Even our new construction fourplexes, they're pre-sold 6 months in advance. So we get them, but they don't stay very, very long. Me personally, I've purchased single-family homes, duplexes, fourplexes. I've gone as high or as big as a 40-unit apartment. And each of these product types have their pros and cons. So, it's not that everybody should go for the larger apartment buildings. That's not necessarily what everybody should be investing in, especially if they don't understand it. That's not the place to start. If you think of Monopoly, you start with 4 greenhouses, then you move up to 1 red hotel. So typically that's the best way to progress. But there are people who are very, very successful, financially independent, and they have portfolios of 20, 30, 40, 50, 100 single family homes, and they've never ventured out into larger multi-unit properties.
Yeah, now let's switch gears here a little bit, Marco, and talk about how you and your team at Norada Real Estate are helping place both new and experienced investors in properties that are cash flowing across these markets in kind of a turnkey style. So could you tell us a little bit about what that model looks like from the investor's perspective?
I have to kind of take you back to 2003 and 2004 for a minute.
Okay.
Back then the word turnkey wasn't really used much at all. In fact, I'm not even sure it was really used in the same sentence as real estate. I promoted and marketed the word turnkey and turnkey real estate and turnkey real estate investing a lot. And I did that for years. And then everybody started using the terminology. I'm not taking credit for having put that phrase on the map, but I was kind of the early proponent of it. And the unfortunate thing is that there's no formal definition of what the word turnkey anything is in the real estate world. And so it means different things to different people. And unfortunately for many, it means just a simple rent-ready property, regardless of where it's located in terms of the neighborhood or the market or the overall condition. And so if it's rent-ready, that's not the same as turnkey, at least not for me and not for my team and our company. So a turnkey rental is kind of to play on what we just talked about. Property in a good market, in a good neighborhood, in like new condition, tenant occupied, professionally managed, and no deferred maintenance. That is what we define as a turnkey rental. So when we work with clients, to get back to your question, we kind of have a process of where we start off with a free strategy session. That could be as much as an hour or more, where we want to get inside the head of that person or that investor and find out, where are you today? Where do you want to go in your investing and in your financial plans? Let's map that out and see how you can build that up or build that out using income producing rental real estate. And then you can look at that and you can break that down into a criteria. And then you let your criteria drive your decisions as to where you're going to invest and what you're going to invest in. It's a process. It's not a complicated process, but it's something that most people don't do or don't understand. And so Working with us is very consultative. It's kind of like hand-holding. And so we want to build that relationship and guide people to making the right decisions. So we don't sell info products, books, tapes, CDs, all that kind of stuff. We're not an education company, even though we provide a lot of free education with our blog, my podcast, and other resources. At the end of the day, we just want to help guide people to make the right decisions, the right financial decisions in selecting, acquiring real estate and building that real estate portfolio. And at the end of the day, it's just a very clear, methodical process that we repeat every day with different people.
Well, awesome, Marco. Well, you're also providing a ton of great opportunities for investors to invest in markets that they otherwise might not feel comfortable investing in the sense that they have a newly renovated property that's managed and tenanted. So it's a really great opportunity for this potential investor to go into a new market and to get a little bit of cash flow from an otherwise opportunity they wouldn't have.
Right. And it's not just getting started, which we encourage people to do. Take that first step, even if it's a half step or a quarter step, but it's staying the course. And, that's what we're going to encourage our clients, our investors that we work with to keep doing is get that first one as quickly as you can, get the second one. If you already have 5 or 10, well, great. Let's pick another market. Let's diversify your portfolio. And I'm not saying that we need to do this for you. I'm just saying that you as an investor should consider doing this where you're in 3 to 5 markets. You don't need more than 5, but I think 3 is a good diversification and build a good footprint in each one of those markets that you like for whatever reasons those are. And that goes back to your criteria. But if you have 3 to 5 properties in 3 to 5 markets, you've got a great portfolio and you can build that up. That's going to help you years down the road. But, as time goes on, there's other and more advanced strategies you could look at on how to leverage up and build your portfolio faster and larger.
Yeah, definitely so, Marco. Well, Marco, let's kind of maybe look at a scenario property that you might provide to an investor in, say, Jacksonville, Florida. Would a $150,000 property in that area be safe to say that that's an actual property that one could buy?
Yes. And again, I'm going to tie it right back to the neighborhood because, it's not just a $150,000 or even $120,000 property because you can get anything in that range. But yes, we like Jacksonville, Florida for many reasons. It's got strong appreciation potential, good cash flow in the right neighborhoods. You've got a good, strong rental pool that will stay for a prolonged period of time because they like the schools and whatnot. So that's just one example. But just to give you kind of a statistic, if you will, most of what investors purchase through our network and the properties that we have on our website fall in the $80,000 to $150,000 price range. That is probably 90% of the single family homes that we sell. When you start getting into duplexes, fourplexes, obviously, we're talking larger price points, but on a per unit basis, it works out to be very similar. It's still going to be in that $100,000 to $150,000 price range. So I guess to avoid a landmine, a recommendation I would give to people, and this is a strong recommendation because I can't tell you how often we get calls from people saying, hey, I'm talking to another company or some local provider or someone who's not even in the city and, they're in another state altogether and they're selling properties in a particular market. And they say, well, they've got a really nice renovated property. It's $50,000, $60,000. I think it's a great place to start. It's already rented. It's under management. It's only $60,000. And they're saying, I just want to get my feet wet, or I just want to dip my toe in the water, or I want to start small, or I want to reduce my risk. Well, by purchasing that $50,000, $60,000 rental property, you're doing the exact opposite of what you're setting out to do in terms of avoiding risk or dipping your toe in the water. If you want a good experience and you want to start right and you want the least amount of brain damage, what you should be doing is focusing on the type of demographic that you want to serve as a landlord. And what that means is this, is if you want a good quality, what I'll refer to as a Macy's tenant, maybe not quite a Nordstrom's tenant, but let's say a good quality Macy's tenant that's well rooted in a neighborhood. Maybe they have kids and they're ingrained in the school system, so they really don't want to be moving. What you should be focusing on are properties that are, let's say, 90 to 140, 150,000 in that range. Yes, your down payment's going to be a little more, but it's only 20% of the purchase price, so it's not that much more. But that difference in the down payment to get a better quality tenant in a better quality neighborhood because you're in a better demographic because of the price point, you're going to save yourself a lot of grief later and you're going to have a much better experience and you're going to feel really good about your decision and you're going to want to buy more of that same type of property. So don't start small or dipping your toe in the water by thinking the way to do that is to buy a $40,000, $50,000, $60,000 crack house in a C- neighborhood.
Yeah, it's an interesting point you make, Marco, and that is an investor might be trying to buy this cheaper property to avoid risk, and in fact, they're taking more risk on by targeting a certain type of demographic or tenant with those types of rentals.
That's exactly my point, yes.
Well, Marco, how do you and your team at Norada Real Estate screen and put in place property management companies that the prospective investor can feel comfortable with?
So every single one of the properties that we have on our website, even the ones that are not on there, because a lot of them get put under contract before they even hit the website, but every property that is sold through our network is tied to a professional, full-service, third-party property management company. We don't do any of the management. We never want to do any of the management. I consider it a thankless job. So I'd rather have the professionals that focus on that day in and day out do what they do best. So these are companies that we trust, we have history with, sometimes for many, many, many years. They provide good service. We have good feedback from our clients based on their work. And so we have a long history and we've vetted them over time. So as part of the due diligence that you would do as an investor working with us is we'll put you in touch with them usually pretty early on to have a conversation and learn about their services and how they work and how they communicate and what they charge. And we want you to feel good about them and have that warm and fuzzy feeling in your belly. If the chemistry's not there, that's fine. At the end of the day, it's your property. You're the boss and you can change the property manager whenever you want. We find that rarely happens, at least not in the beginning. So you're free to use anybody you choose. If you already have a portfolio in a particular market and you're just adding to that portfolio and you have one management company you work with there already, then stick with them. You don't need to take on the management company that we are working with. We recommend them, but you don't have to use them. So it's whatever makes sense, and everybody's case by case, and we work with you hand in hand. But, we do vet them, and we have a long-term relationship with them. So they bend over backwards for our clients because they know that we send them business. And if they mess that up, they're going to lose us as a strong referral partner.
Yeah. Okay. Well, that's good to know and certainly more comforting. Well, Marco, can you tell us how you've built your team, both from your personal investing perspective and your team with Norada Real Estate?
Well, personally, I think there's a lot of overlap between those two just because I live in this day in and day out. So the people I use are also the people that, we use with Norada Real Estate Investments. And so the team is really just what we were talking about, long-term relationships, and people that provide good service, continually communicate well. If you're starting from scratch and you're doing this on your own, that's all well and fine. You probably have to make a bunch of calls, ask for some references and referrals, and, kind of meander your way through the wilderness. And if things go well and you're a little on the lucky side, great, you'll have a good team working for you. You don't need to do that if you're working with us, of course. But if you're out building your own team, you want to ask a lot of questions, Google search them, or, go to a search engine and find what you can find on them as far as ratings, reviews, any complaints. A few complaints are fine. Almost every company out there is going to have some complaints. You can't make 100% of people happy. Sure. If you look at companies like Walmart and McDonald's, and they've got like literally tens of thousands of negative reviews and complaints. But what you want to do is you want to find a common thread with most people being satisfied or content with the service that's out there. If you're starting cold, you just got to put in a lot of work. You got to pick up the phone and do some research online. Referrals shortcut that quite a bit, but always, ask for references, check references for service providers. Places like Angie's List and whatnot will also help. I don't know if that answers your question.
Yeah, definitely so. Well, Marco, what are your future goals, both personally and with Norada Real Estate?
Well, my goal for Norada Real Estate is very, very clear. We're setting up to be and have been pursuing becoming the number one premier provider of turnkey cash flow investment property in the United States. And, we're in the top 3. We're well on track. And so we're very busy. We're growing and we're very fortunate and happy about that. But we want to keep building the tools, resources, and services that we provide to help investors achieve 2 things. I mean, at the end of the day, this is what we're trying to do for people. 1 is to create passive income, and 2 is to create wealth. And we want to make that as easy as possible. And I think if we stay focused on that, then we will achieve the goal of becoming the biggest and most well-known provider of turnkey rental income properties.
Yeah, awesome. Okay.
Yeah, as far as my personal goals, I mean, that is one of my main goals. I'm working on some other projects too that are related to real estate. So I've got some other related goals, but so I'm just going to stay the course, keep investing, and, build a portfolio as large as I can build it.
Yeah. Okay. Well, Marco, what are your reasons why? That is, why are you doing what you're doing?
Well, there's that saying from Zig Ziglar, if you help enough people get what they want, you'll have everything you want. So whatever we put out there and the more people we help achieve their goals and their financial freedom, the more it helps us because it's a win-win. It's a very symbiotic relationship. But it's kind of cool to have a legacy and to have a company that is setting out to help hundreds and thousands of people invest in real estate, whether they're starting from nothing, like zero, no properties, or they already have experience and they have a small portfolio and they want to take it to another level. That's a great story, and that's what we're after. And at the end of the day, that's a great legacy to leave behind, where you've been able to help families, not just people, but families and their future generations have freedom, financial freedom, time freedom, and a legacy. So that's kind of the legacy I want to leave behind.
Yeah, awesome. Having that lasting impression and that legacy, I'm sure, is a very good reason why and keep you doing what you're doing and just keep you motivated and out there trying to help people grow their real estate portfolios.
Yeah, exactly.
Well, Marco, as we're wrapping up here, we've got a lightning round, just a series of questions we'd like to ask you, and you just answer from the hip. How does that sound?
Sounds great.
All right. Well, our first question, Marco, is what was your biggest hurdle getting started investing in real estate, and how did you overcome it?
Biggest hurdle probably would be the same as many people, and that's a lack of knowledge. And today, especially today, it's so easy to gain that knowledge. I mean, it's not only can you buy paperback books, but now you can order ebooks, you can have digital books, Kindle books. The ease of use of the internet now, you can find information about virtually anything you want doing a search online. So and plus now there's tons of podcasts. You've got your podcast, which is great. You've got the podcast I do, the Passive Real Estate Investing podcast. I mean, there's no excuse to not build your knowledge base. And so that is key because everything starts with education. The more you know, the more you'll grow, and the more you learn, the more you'll earn. That's kind of the saying. It's really the biggest hurdle was a lack of knowledge. It wasn't really that big of a hurdle because I just blindly punched through it and just pushed and pushed and pushed, and I kind of gained the knowledge as I went. So that's street smarts. That's real world knowledge. But the problem in doing it that way is you're going to step on a lot of landmines. You're going to make a lot of mistakes, and can be very expensive. And for me, it was costly to the tune of hundreds of thousands of dollars of losses. And so if you want to minimize that, I'm not going to say avoid it, but if you want to minimize that, educate yourself as best and as much as you can.
Yeah, awesome. I completely agree, Marco. Well, Marco, do you have a personal habit that contributes to your success?
Yes, two things. I try to learn something every single day. And even if I don't have the time to sit down and read a book or pull out something I want to educate myself on, I always try to find something that I can learn something from, whether it's an experience during that day, something new I've learned about a contract or a legal aspect or something to do with asset protection. I'm always trying to learn something. So that's number one. The other habit is the habit of action. You have to write down a few things that you're going to actually do every day. It doesn't have to be for tomorrow. It has to be for today, but write down what you're going to do today and then make sure that you take action and do it. And even if you can't accomplish it or finish it, at least take steps that bring you, 50% of the way there to completion or 75% of the way there, because then it keeps the momentum going. It keeps you moving forward because maybe tomorrow you'll get 150% of the things you need to get done, and it all averages out. But knowledge, learning, and taking action are the two habits that I practice every day.
Yeah, awesome. Okay. Well, Marco, do you have an online resource that you find valuable?
Yeah, there's probably a lot of online resources. One website I like to use, not exclusively, but quite a bit, is Neighborhood Scout. I've gotten to know the owner of the company that started that site from Location Inc. He's I think he's a geologist by trade, but he strikes me as an engineer. But anyways, they aggregate a lot of data, and they have data that you can pull on virtually every single neighborhood in the country, including down to the street address level. So, again, it's a great tool. I don't use it exclusively in my decision making, but it helps a lot because there's a lot of information there.
Yeah, there's information on there such as demographics, economics, population, just all kinds of good stuff to help you make a decision when exploring a new market potentially.
Yeah, exactly.
All right, Marco, do you have a book that you recommend to the listeners and why?
Well, there's probably a number of books. I would say on the real estate side of the equation, I would say any of the Rich Dad books, the Robert Kiyosaki books. I mean, if you're just getting started and everything is very new to you, an absolute read is Rich Dad, Poor Dad. It is a mind bender and a complete mind changer. That's the starting point. And then there's a whole series of books in that series that you could read and educate yourself on. Something that's a little bit more mental and psychological, in the whole area of success and achievement, is Think and Grow Rich. It's a classic. It's been around for many, many decades, and it reads a little awkwardly if you're a young guy or a young gal and you're reading this for the first time. Some of the language that they use is not common language, so you kind of have to scratch your head and figure out what he's talking about, but you'll figure it out. And that's a really good foundational book in terms of how to think success and how to achieve success just simply by the way you think. And I mean, it's all in the title, Think and Grow Rich. So, it's a great book to read once a year.
Yeah, definitely so. Like you said, the Rich Dad series, the Rich Dad Poor Dad by Robert Kiyosaki is just a fundamental book that anybody in real estate investing has to read. It's a complete mind changer. And the others, Think and Grow Rich, that's by Napoleon Hill, if I'm not mistaken. And we'll link both of those books in the show notes for our listeners to get a hold of if they're interested.
Yep.
All right, Marco, last question. If you were to give advice to your 20-year-old self to get started investing in real estate, what would it be?
It's really a combination of a lot of the stuff we talked about today, and that would be this. I sound like a broken record, but it's really at the end of the day, it's this. Educate yourself, build your knowledge base, never stop learning, and last but not least, take action. I will probably add a couple things to that. One is to build your income as much as you can and as fast as you can, and then take that income, save as much as you can, as fast as you can from the increased income, and then don't hold on to it. Don't sit on it. Just deploy it and invest it as soon as you can. You may need a chunk of cash, and that's fine. Just build up that chunk of cash as quickly as you can and then put it to work. Get it invested. For me, I don't like to have money sitting around. At the end of the day, I'm either going to be buying some real estate like the single family homes we've been talking about, or, I'm working on some syndications right now. So I'm going to be putting cash into those syndications, which, are group investments. And that's just something that would be open to some other investors. There are some qualification criteria. And, you got to look around. We're looking at a real estate development play in the cannabis space because that's kind of the new gold rush, if you will. And so be open-minded and look at other ways to make money in spaces that make sense. And for me, the number one thing is real estate. So anything that ties into real estate that generates income, cash flow, I'm all over it.
Yeah, there you go. Well, great advice, Marco. Marco, as we're wrapping up here, is there any parting piece of advice you'd like to leave with our audience?
Parting piece of advice. How about a free giveaway?
Hey, that works.
All right. So I've got this 40-some page free guide that is available as a free download from our website, either one. And it is what I've tried to do is I've tried to give a lot of great, useful, actionable information and consolidate it down. So it's basically a mini book. Anyways, it's called The Ultimate Guide to Passive Real Estate Investing. And you can get that on either one of our websites, either noradarealestate.com. The other website is passiverealestateinvesting.com. So either one.
Okay, awesome. We'll link both of those websites in the show notes for our listeners to visit and download that free 40-page guide.
Perfect. Thank you.
All right, Marco, as we're wrapping up here, where can our audience learn more about you and connect with you if they have any questions?
Yeah, they can connect with me on our main website, Norada, Norada, realestate.com. There's a contact form there. There's information about me and our team. And really, that's kind of the home, if you will. And all the contact information is there.
All right. Marco, thank you so much for coming on today's show. We look forward to talking with you next time.
It's been a lot of fun, Jacob. Thank you so much.
Thank you. Take care, Marco. All right. That wraps up our episode today with Marco Santarelli. Marco provides truly passive real estate investments in cash flowing markets nationwide to investors just like you. If you have any questions about these markets, search noradarealestate.com, where Marco provides free market reports on each of these cash flowing markets. If you have any questions or comments about anything discussed in today's show, reach out to Marco or myself and we'd be happy to help you out. As always, if you have any questions or comments or want to hear something or someone specific on this show, feel free to reach out to me. You can contact me at www.jacobayers.com/contact or connect with me on Facebook at The Real Estate Way to Wealth and Freedom. If you like what you heard on the show today, feel free to leave a rating and review on whichever platform you're listening on. Till next week, signing off, I'm your host, Jacob Ayers.
You've been listening to the Real Estate Way to Wealth and Freedom podcast, providing you actionable content to build your real estate empire. Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for personal advice. The opinions of guests are their own. Information is not guaranteed. all investment strategies have a potential for profit or loss. The host is operating on behalf of the Real Estate Way to Wealth and Freedom, LLC exclusively.